Look, the easiest thing to do when you meet an early stage founder is to come up with the reasons that they'll fail, because there's just a lot of really obvious reasons. Statistically, they'll fail. They'll never be able to compete against the incumbent. Their product sucks. They don't know how to run a business. There's a million things that you could say. Like that is absolutely the easiest, cheapest thing you can do. The hard thing is to look past all that, look through all that, and to say, what is special about this person? What is possible in this situation? And one of the best things about this job is it's default optimistic. You have to be a huge optimist to do this job, because you're investing in early stage companies where statistically they're unlikely to succeed, and yet you believe that they have something that is going to make that not true. It's going to make them an anomaly.
Hi everyone, welcome to episode 109 of the Startup Playbook Podcast. I'm your host Rohit Bhargava, and each week I interview successful founders, investors, and subject matter experts on how they got started, the strategies they used to succeed, and their advice to current and future entrepreneurs. Now, I know it's been a little while since I've published an episode of the podcast, but I'm back with a new format of the show. Every Tuesday at 8 a.m, I'll go live with a new guest for the week, and our listeners will be able to tune in and listen to the podcast interview while it happens, as well as ask questions of our guests. And to kick off this new format, I'm delighted to bring back one of our most popular guests to date, Nick Crocker, the general partner at Blackbird Ventures. Blackbird Ventures is a $500 million VC fund that invests in the most ambitious founders from Australia and New Zealand. We covered a range of topics in this interview, including the importance of performance coaching for founders, how VC funds like Blackbird look for conviction when assessing investment deals, as well as the importance of storytelling for investors. Without further ado, here is my interview with Nick Crocker. Hi everyone, welcome to episode 109 of the Startup Playbook Podcast, and our very first online live podcast that we're doing. Delighted to have Nick on back as one of our first few, back as our first second time guest on the show. Before we jump into the episode, just wanted to run through the format of how this podcast will work, and also how you can get involved. So first of all, Nick and I will do an interview for about 45 to 50 minutes or so. Then we'll open it up to audience Q&A. So there's a couple of questions that I've picked out from the registration process. But if you would like to submit questions as we go along, there's a little Q&A tab at the bottom of the screen. So please use that to submit any questions that you have for Nick as we go through the interview, and I'll pick out a few of them as well. And if you want to share along socially as we go along as well, the hashtag for the event is Playbook Live. So with that out of the way, let's get straight into the episode. And Nick, welcome back to the Startup Playbook Podcast.
Thank you. Thank you for having me. Pleasure to be the first ever second time guest.
First ever second time guest. I think you were also one of the first live podcast guests that we had in person as well. So a bit of a trendsetter for the show.
Thank you.
So Nick, it's been just over 3 years actually since we last did an interview. And at that time, you had just moved back to Australia, had recently started your role at Blackbird as well. And obviously your role itself has changed quite significantly over that time period, but the world has changed a fair bit as well. I guess taking a step back, for people that may not be as familiar with your background or may not have heard the first episode, do you want to share a little bit about your story, both sort of leading up to that first interview and sort of what's happened since then?
Sure. I accidentally came to being an entrepreneur. I did not have entrepreneurial role models growing up. My mum was a GP. My dad was a woodworker and made fine furniture. So it took me a long time to realize that there was such a thing as an entrepreneurial path. I actually was a journalist at university and did a series of interviews called The White Files, which was a series of interviews with enterprising people who were part of Gen Y, which was a thing 15 years ago. And I interviewed poets and politicians and puppeteers, and then randomly interviewed a group of 3 entrepreneurs that were working out of a co-working space in Brisbane. And there was this sliding doors moment in my life where meeting them made me realize who I'd been all along. And so that was 11 to 12 years ago now. And pretty quickly from meeting them, joined a startup and then started a startup and then started another startup and then started investing in startups and then joined Blackbird. And now I'm here as a partner at Blackbird running our Melbourne office.
Very cool. Obviously such a fascinating journey. And we touched on a couple of your experiences, both with We Are Hunted and sessions in the first episode that we did. I guess going back and sort of we touched on, the environment is obviously very different, not just over the 3 years, but even just the last sort of month or two with everything that's going on with COVID. And obviously, I've had a lot of conversations with founders in terms of how they're going to get through this period. And one of the things that's come up in a couple of conversations is potentially the opportunity to exit their business. And I know that when we first spoke, you had spoken about sessions in particular being your sort of life's mission, but then you ended up selling to MyFitnessPal. And I think in the interview, you had mentioned that one of your competitors had recently sort of passed over the 100K users. That was your initial goal of setting out. And there was a little bit of regret from the sounds of it, from going through that sale. Just curious to know, from your perspective, both as a founder and from a VC side as well, what are some of your kind of insights and advice, sort of looking back at those type of time periods for founders that are potentially looking at different options of exiting out of their business?
Yeah, I don't have any, sitting here 3 years later, I have no regret at all. Selling sessions was one of the best things that ever happened to me and one of the best experiences. And for all the three of us who were working on it, we ended up spending a long time at MyFitnessPal. I was there 3 years. Ben was there 5 years. Glennis was there 4 years. So it was a really good fit in terms of extending our mission and finding our place where we really could thrive. So it's a very individual decision to sell your company. Ours was a small company that wasn't growing fast enough. And so the decision to sell was forced on us a little bit by the fact that we weren't growing fast enough to raise venture capital effectively. But it was a wonderful thing that happened, and I learned so much at MyFitnessPal. And sometimes the learnings you can get from a startup that's failing are good and beneficial, but it's also really nice to be inside a startup that's growing and succeeding. And that was what I got at MyFitnessPal. Sessions was a little bit what not to do, and MyFitnessPal was what to do, and I got to see both sides of that in a really short space of time. In terms of founders who are talking about exiting right now, I think it would be a difficult thing to exit your business right now. There's just so much uncertainty globally that I think the M&A market will be relatively frozen for a little while, unless it's sort of desperate M&A where there's just companies buying companies that are failing, basically. So yeah, now would be a really difficult time to sell if you were selling. And as general advice, which is honestly not that valuable, but as general advice, I think the better path than selling now would probably be to hold on and figure out a way to survive until things get a little bit back to normal.
Do you have, obviously you have a portfolio of companies. I'm sure you speak to a lot of founders as well, both in and outside of your portfolio. What are some of the strategies that sort of founders are thinking about or approaching, or sort of what are some of the actions that you're seeing from startups to help get them through this period of uncertainty?
Yeah. So I'm lucky enough to be on the board of Culture Amp, and I think Didier, who's the Culture Amp CEO, who I think has been on this podcast, is just doing an incredible job. So some of the things that tactically he's doing really well. So he's doing a great job of board communications right now. So typically our board will meet on a quarterly basis, and Didier is writing weekly, very detailed and very granular updates to the board, tracking progress. And so this is a really great time to build trust with the inner circle of people that are around your company. And so Didier has, I think, done a really, really good job of bringing that openness and transparency on a very week-to-week basis. So that's something I think if you have shareholders, boards, investors, advisors, that's a really good practice, is while you're going through this uncertain time, to bring certainty to the people that are around you through transparency. Culture Amp has a unique challenge of being New York office, London office, San Francisco office, Melbourne office. Everyone now work from home. And so Didier does, so you have this time zone issue. Didier is doing a really great job of sending a video to the team every single day. And so it's the team, where a team might be wondering, how is this impacting us? He's just doing a great job of that consistent, open, transparent communication with the whole team. And then the other thing that he's done that I love, or the Culture Amp has done that I love, is asked, how can we use this as an opportunity? And so I think if you look at some of the products, features, and announcements that have come out of Culture Amp over the last 2-3 weeks, you've really seen them step up as a global leader in partnering with companies on how to survive this whole thing. And so for any CEO that has a group of people that they are leading, they want to know how those people are feeling, and they're feeling very different today than they did 3 months ago. And so you actually need a more real-time version of how your team is feeling. And I love the way that's the way that Culture Amp has evolved its messaging to customers. It really, in a way that's reacted to the situation that we find ourselves in, has been inspiring, honestly. And we're talking about thousands of customers all around the world, some of the biggest companies we all know, relying on Culture Amp data every single day a week to make decisions. At Blackbird, we used their wellbeing survey to see how our team was doing. And it really showed us, for example, that people weren't sure what our wellbeing policy or initiatives were. And so we were able to put one together in 24 hours and share it with the team and say, during this work from home lockdown period, here's exactly the set of resources that you can draw on if you need. So I think Culture Amp has been a huge tool for us at Blackbird, but really a leader, not just here, but globally. And Didier's really been a real champion of that openness and transparency with customers, team, and shareholders. I really love Rory at Propeller. The themes are openness and transparency, but Rory, who's the CEO of Propeller, has done a great job of getting his sales team, who's on the ground with customers, to report back to his whole team. And so he's set up a dedicated Slack channel where the sales team is reporting back on what customers are saying about their businesses and their prospects and how they're approaching this challenge, so that, again, in that void of uncertainty, people's imaginations will creep in. And so it's really important to share the most up-to-date real-time information that you have. And so I think the way Rory's done that has been really inspiring.
I think one of the things about being a leader is making difficult decisions. And I know that when I was running my own company, one of the hardest decisions that I had to make, and there's a lot, is letting go of people. And again, just, I personally had a couple of conversations with founders that have been thinking about or had to make those sort of difficult decisions. And it's always a balance, especially when you have an existing great culture in place. How do you become a leader with high EQ and sort of maintain that same culture and kind of inspiring your team to push forward as you're going through potential layoffs of staff through this period?
I mean, with great difficulty is the answer. Jodie Oster, who runs Uber Eats Australia, New Zealand, once was doing a session with the Startmate teams talking about how you would let someone go. And she said, if it's a surprise to them, you did it wrong. And so I think one of the purposes of transparency in terms of being a leader is to make sure that your team has the same has the same information that you have and is reacting to the same information that you're seeing. And at a certain point, it becomes it's harsh to say it becomes a mathematical equation, how long you can survive on the cash that you have in the bank. And for most startups, the number one cost is people. So there are, we've all seen and heard the stories and have friends who've been laid off or have had salary reduced or have been moved to 4 days a week or whatever the situation might be. So the summary is, it's a really hard thing to summarize, because this topic, how do you let people go, I think is, maybe one of the most stressful things that a founder can go through. And I think for me to kind of come up with my top 3 tips for letting people go would be disingenuous. It's not, it's sort of like tearing off a limb in the what it feels like for the CEO that has to do it, because often they're not just teammates, they're like friends and people that you've sort of made a promise to about what your company would be, and that didn't play out. So I guess I come back to the same things that I mentioned earlier around COVID, which is that transparency and that openness. But sometimes that transparency and openness will paint a picture where it's just inevitable that teams or costs will have to be cut in order for the company to survive. And I think that's what makes this period so intensely stressful for any leader. And a big part of our job is to do what we can to offset that stress. But I don't want to make it sound easy or neat. It's not. It's actually, it's pretty torturous. Is probably not an understatement.
You touched on Jodie, who is incredible. I've had her on the podcast as well. And, I think kind of to your point around sort of leadership as well, there's a lot of advice or people that you can lean on through this process. And I know that you personally are a really big fan of executive coaching for founders, which I know that isn't a topic that a lot of founders normally sort of think about or go to at all. Just really curious to know about sort of your experience with executive coaching and I guess why that's important and how founders can find the right type of executive coach for them.
Yeah, and an executive coach is one of the people that I think a CEO should have around them to make being a CEO bearable. So you need I think every CEO at a certain point, and I don't know what that point is, but let's, for argument's sake, say as soon as your company's enterprise value passes $5 million, it's probably worth you investing $5,000 to $10,000 a year in a coach that helps you be the best CEO that you can be. We can debate whether that's the right number, but let's just use that as an example. So you need a coach. I think every CEO needs a counselor before they actually need the counselor, as in inevitably during the time that you'll be a CEO, you'll have something external, whether it's a parent that gets sick or something happening in your family that will just drive your external stress levels to 10 out of 10, and then you'll be back at work and stress will rise to 10 out of 10, and suddenly those are where you hit that boiling point. And so the thing is, you don't want to wait until a tragedy strikes to have to go and find a counselor. You want to have someone that you can speak to about that stuff before you actually need them. And an executive coach is not a counselor. Those are two very different things. I think you need friends who just don't care about your stock price or your valuation, or friends who are just a little bit removed from whatever you're going through. I think relying on partners too heavily is a risk, because that relationship that you have with your partner, I think it can be really confined and constrained if you bring too much of your work home, and it can end up, whoever's the CEO bringing those stories home can end up dominating the relationship. And so one person can't talk about something that's meaningful to them but maybe trivial relative to the other partner who's the CEO talking about, I just laid off 15 people today. Or it can be, so I think over-relying on partners can be a bit of a risk. And then I think the other thing that every founder needs is some kind of meditation or mindfulness practice. And that can be everything from running to walking, but whatever it is, it's alone time where you get a little bit of distance from your thoughts. So there's a whole suite of support that I think CEOs need, because I do think, and founders need, because I do think what they go through is the level of stress that they go through on a sustained basis is really not well understood or really well appreciated in any kind of complete way. So executive coaching is really just an executive coach helps you to understand yourself so that you can understand in a given situation, here's how I will react, and here are the ways that reaction might be helpful or unhelpful. And so it's a little bit of a hard one to explain, and it's one of those things where until you've experienced it, it's often confusing. Or I think people think of executive coaches as people that will come and be business coaches, like in this business situation, do this business strategy. And it's actually just who are you? How are you wired? What are the stories that you're telling yourself that are making you react in different ways to different situations? And then how can we evolve your understanding of yourself and evolve the understanding of how you react to those situations to make better decisions in the moment? And it's an ongoing process. It's not like, I'm doing a quarter of executive coaching and now I'm good. It's like you do a quarter of executive coaching, you become a new person, and that new person is interacting with the world in different ways. And now you need the coaching again to figure out, okay, well, now I'm this new person. I've got a new set of relationships that I'm managing and evolving. So it's an evolving, ongoing thing. Now, every CEO in our portfolio that's valued over probably $250 million has an executive coach. And I think what I would love to see sort of ecosystem-wide is coaching go down to Series A, Series B level companies, not just the companies that are really highly valued, because I think the earlier we can get coaching, the earlier we can help these CEOs to understand the way they work, the better. And I love it. The coach I use is his name's Ben Hudson. He runs a firm called Optim, OPTIM. He works with a number of the Blackbird and Startmate founder community. He's been, I've been working with him for 2 years. It's been life-changing.
I think when we spoke about executive coaching a little while ago, you mentioned that it's kind of similar to elite athletes, where it's not uncommon for elite athletes, whether it's an individual or as a sporting team, to have a coach. I'm a huge Liverpool fan, and I've seen what a big difference having the right coach with the right team makes when we can find
Jürgen.
But on that, do you have any strategies or advice for people that are sort of looking for an executive coach for the first time in terms of identifying who would potentially be the right coach, or what particular areas they need help or need their coach to kind of spike in?
Yeah, it's quite good actually. The executive coaching kind of community has this sort of blanket agreement where before you engage the coach, you do what's called a chemistry session. And coaches do so many chemistry sessions that if you were to have a chemistry session with a coach and say, hey, it's not for me, it wouldn't be there wouldn't be a great sense of hurt. It's like that chemistry has to be there. You have to connect, and you have to feel a sense of trust that you can share important, meaningful things with this person. So the key is talk to the founders you respect who have executive coaches and ask them who their coaches are. Get a long list, and Michael Batko, who's Startmate's CEO, I think he's written a blog post. If he hasn't, he should write a blog post, because he went really deep on how executive coaching works, and I think he met 7 or 8 as part of his chemistry connection finding. So you want to meet 3 to 5 to get a sense of what they're like and what you like and what you want in a coach and how you want them to respond to you. So that would be my advice. Talk to CEOs who have them, get introductions, meet a few, and then just do that chemistry session and be really honest and authentic with yourself about, is this someone I want to spend the next 2 years kind of unlocking how to be the best leader.
It's really like having someone as part of your team, as part of your kind of leadership team to help you perform better.
I mean, look, if a tennis player spent a year on the ATP circuit with no coach, people would just say, what are they doing? Like, what the hell are they doing? It's insane. And yet 95% of startup CEOs right now don't have an executive coach, and no one's blinking an eye. Like, I think that gap gets closed.
On that, so speaking of teams in general, I was at the Sunrise conference in New Zealand.
Wow. We had just had our second child, so he was 5 weeks old at that point. So I was unable to make it, unfortunately.
Congratulations. Well, I was about to talk, one of the things that really sticks out to me, I thought that conference was incredible, by the way, but I thought that one of the things that really stuck out to me and still resonates with me now is hearing, I think it was Sam Wong who got on stage and spoke about Blackbird's values. core values. And one of the things that you mentioned, obviously, was sorry, let me read this. Make our kids proud was kind of one of those values. I'm wondering, what did that sort of process look like for Blackbird in terms of refining everything down to its core principles or core values? And what does that process look like for Blackbird, which I think was probably 3 or 4 years into its journey before, I guess, putting together a set of values like that?
Yeah, that's exactly right. The specifics of the process was, we were 5 people at that time, the 4 partners and Joel, who's now creative director. We sat around the boardroom and posted Post-its up on the TV that was in the boardroom, because we didn't have a whiteboard. I remember Nikki's daughter was in the room with us as well. And we just wrote all the things that we felt were really valuable at Blackbird, things that we thought mattered, things that we would call values, things that we loved about Blackbird. It was like it wasn't write your values. It was sort of a broader exercise about writing what mattered to us about working at Blackbird. And then we just kind of collated all the Post-it notes around the core themes. So making your kids proud was something that came through for all of us in different ways. But it's quite a clarifying, it is quite a clarifying value, because you can simply ask, is this something that would make your kids proud? And there's generally not an answer that has a lot of grey in it. I can see that yes or no. And if it's any shade of grey, it's a no. We talked about, we wear T-shirts, which was all about just making sure that sometimes when capital and entrepreneurs meet, the capital sits on the other side of the table, and the entrepreneur is sort of in service to the capital. And there's this weird dynamic that's historical in Australia about the way financing early stage startups has developed. And we really felt like, no, we're like the entrepreneurs that we fund. We sit on the same side of the table as them, and there isn't this power imbalance that, and so we wear T-shirts. Rick doesn't wear a lot of T-shirts, but it isn't about specifically the T-shirts. It's about reminding ourselves that we're like the entrepreneurs we serve, not finance people, sitting there in our throne, getting people to pitch us for capital. So the values they've been awesome. They're a part of our onboarding. We reference them all the time in decision making. I think we all feel really, there's no debate about them. We all feel really aligned on them. And it was a very organic process of sitting down together and writing about what mattered to us and how we wanted to talk about what was valuable to Blackbird and what Blackbird was and what Blackbird wasn't.
So I know from my current role that having a strong set of values just helps with everything from, as you mentioned, something that you refer back to, but also how you make day-to-day decisions. And one of the things that, one of the values from Blackbird that stuck out to me was, I think it's called "We Believe in Love at First Sight." And kind of speaking about conviction in your investment decision-making process. And that was actually something that you touched on in the first interview that we did 3 years ago as well. Just wondering from a Blackbird perspective, how has that conviction or the way that you look for conviction changed at all, given the current situation that we have around COVID?
Not at all. We still believe in love at first sight. Look, the easiest thing to do when you meet an early stage founder is to come up with the reasons that they'll fail, because there's just a lot of really obvious reasons. Statistically, they'll fail. They'll never be able to compete against the incumbent. Their product sucks. They don't know how to run a business. There's a million things that you could say. Like that is absolutely the easiest, cheapest thing you can do. It's the cheapest skill. It's it's the peanut gallery stuff. And the hard thing is to look past all that, look through all that, and to say, what is special about this person? What is possible in this situation? And one of the best things about this job is it's default optimistic. You have to be a huge optimist to do this job, because you're investing in early stage companies where statistically they're unlikely to succeed, and yet you believe that they have something that is going to make that not true. It's going to make them an anomaly. So it's to get an investment done, you really need such a high level of conviction. So I do 2 new investments a year. And so if you think, and I properly meet and get to know 100 companies, it's almost like plus or minus, 95 companies last year, 105 companies 2 years ago. It's about 100 companies a year to do 2 new investments. But it's pretty rare to find something where you just go, I really want to do this. And because once you bring it to the partner meeting, then you have 3 partners that have never met the founder and are just seeing it as an idea or the way you're describing it, and they're just instantly asking you questions. Well, how are they going to scale customers? How are they going to sell a product at that price? Or that's going to be very, there's just all of a sudden you just start getting all the reasons why it won't work. And that's the role that the partners need to play. They need to make sure that you're making a good decision. But the thing that the through line that carries an investment against all of those knocks, doubts, fears is that conviction, that sense of like, yes, but there's really something here. And so what I love about that value, the love at first sight value, is it just does create space it does leave a little bit of space for magic. So if you go right back to our first investment in Zoox, again, like the easiest thing would have been to come up with reasons why Zoox was not going to get a self-driving car on the road by 2021. But that's a very high chance of happening. And it's just a reminder to believe in to believe in love at first sight, that amazing things are possible despite all the reasons why they might not be.
I've heard about the Zoox investment story quite a few times as well. And, one of the interesting things about Blackbird probably over the last couple of years is kind of the shift away from the traditional, what you would think most VC funds would traditionally invest into looking at new areas such as staple foods. Hot tip, we've got Michael Fox coming on the podcast in a couple of weeks as well.
Awesome.
So just curious from a Blackbird perspective internally, kind of what are some of the discussions, or what's kind of the thought process behind sort of shifting away from more of the I guess, quote unquote, traditional tech businesses to investing into different areas?
Yeah, so when it comes to Blackbird, traditional means global from day one, no salesperson, bottoms up, SaaS companies. And then the first wave of non-traditional Blackbird investments was what we call our science non-fiction investments, which is that they sound like science fiction, but they're actually not. And so that's companies like Gilmore Space, Zoox, Baraha, Fleet, et cetera. And then there's SaaS, frontier technologies, or science non-fiction, and there's 2 new themes that we're really exploring heavily at the moment. So the first one is healthcare, and the second one is alternative proteins. So alternative proteins was Samantha, who really led our river of inquiry, is what we call it internally, our river of inquiry. And so a river of inquiry starts with meeting a founder. So in this case, we met a founder called Nick Beaumont, who runs a company called Huros, which is building meat in a petri dish, basically. And that was the first investment we made out of our 2018 fund. And it's interesting because Samantha was actually looking at she started by looking at what do we do with all the waste that is a result of clothing in the fashion industry. That was the seed of inquiry where it began. And then she sort of went further and further down the rabbit hole and then realized, well, actually, food is like, this is a really big problem. This is a long time ago too. This is maybe 2 or 3 years ago. And actually, we're going to have to change the way we eat. And so you have this combination of pursuing curiosity and then meeting a founder that shows you what the future looks like. And then you start to do things like you write blog posts. So you can see Samantha's very first blog post on the topic. You attend conferences. So she was going to a couple of small conferences around the world where she was getting to know founders, investors, and some of the key people in the space. And then if you start a river of inquiry early enough, you get to meet all the key founders in the space right at the beginning, and they will introduce you to other founders, and you become a known person as someone that wants to invest. So that's been quite awesome actually to watch. So we've done, out of the 20-ish companies in our third fund, 5 of them are alternative protein companies. One of them, Michael, you'll get to meet and you'll get to hear about his vision, and it's awesome. Like it's an inevitable future where we won't be eating as much meat made from animals. We'll be getting protein from different sources, and it's just one of the most, it is one of the most fascinating, inevitable things that's going to happen in society. And so we've started backing some entrepreneurs that we think are going to bring that future forward.
Speaking of backing entrepreneurs, one of the things that you mentioned in the first time that we did this interview 3 years ago was that Australian founders look different from the US, where in the US there is a relatively clear path or trajectory that you can measure, but in Australia it's a little bit different, and you have to really look for small pockets of brilliance in founders. I'm really curious to know, what are some sort of tangible examples of what that sort of looks like from a Blackbird perspective. So out of the 100 companies or so that you meet or really get to know each year, what is it that you're sort of looking for, or what are some examples of things that you've seen in founders that have kind of really highlighted that for you?
Yeah, I would say the thing that happens where we get most excited is that we meet a founder, we come into that meeting, and they explain to us the particular problem where they're an expert, and we come away feeling like we're mini experts in that problem too, and like we've discovered something new in the world. So we come into that meeting seeing the world one way and come out seeing it another. So that ability to teach us something really interesting about the future and talk about how you're going to build a company that's going to accelerate our path there is probably the meta kind of skill that we look for. There's a whole lot of other things that we look for and love. So we look for that tenacity and grit and determination, which often shows up as just a scrappiness, where we're surprised at how much someone has done with so little. We love that storytelling ability where the founder comes into the partner pitch and all four partners come away thinking, like, wow, that was amazing, like excited and amazing. I think, what else do we love? I mean, there's a lot more. I mean, the original point about Australian founders not looking the same is that so America is still the global hub for startups. That might change in the next decade, but America is still it. And in America, you have signals that you can send to people about the kind of person that you are. Harvard, Stanford, Facebook, LinkedIn, whatever it is. You have these like status symbols that you can attach to yourself, and then people interact on the basis of those. But what's the Australian equivalent? Like, I went to the University of X, I worked at this bank or this law, those don't really apply. And so it's refreshing in a way, because I think actually the more I think about it, the more I think that's actually a bug in the Silicon Valley system. When people explain to me, I just invested in this founder and she was, in role X at company Y, I just go, well, so like that doesn't tell me anything about her. And I think it can be a bug in the system to assume that people are something based on where they worked last. We've all worked with terrible people that have worked at very famous, fancy companies. I just don't think it's a signal for much, except how hard it is to hire at scale. So that's what I love about Blackbird and Australian startup ecosystem is you still get, no one says, what university did you go to, or did you work at, I don't even know what the company you would say is that would make it. It just doesn't matter. You get to talk about your idea and your startup, and you get to do that free of labels. I think that's sort of refreshing, and it makes life easier a bit.
One of the things that you just mentioned, I just wanted to hone in on, because I think it's a really important point. And again, something that you mentioned in the first episode was the importance of storytelling. And especially from a context of, I think for a lot of potentially first-time founders or founders that are seeking investment for the first time, they might have the impression that they have a meeting with you, you like them, you write a check straight away, and that's kind of the end of the process. What actually happens is that you need to go and pitch that internally to other people. And if you can't effectively tell their story or kind of really walk away with a strong understanding of and being able to relay that same story to others, it's really difficult. Can you talk, I don't know if you have any advice in terms of where founders can get better at this storytelling or resources that they can go to look at what potentially good examples of that looks like?
Yeah, it's hard. And you end up being a storyteller telling a number of different stories. And they're all, well, they should all be true. But the way that you explain to your investors what's happening at your company versus the way that you explain to your team what's happening to your company versus the way that you explain to your customers what's happening in your company, those are three different books that you're writing at the same time. There's just no practice like doing it. I think if I look back on my fundraising journey, if I just look at the fundraising story that we were telling at sessions, one thing I advise, I say to every startup who's in the fundraising process is, at the end of every pitch meeting that you do with an investor, all the signal will be just writing down every question that investor asked. And so at the end of, let's say, 20 investor meetings, you should have a list of 20, 30, 40, 50 different questions that you've been asked at that point about your business, and all the signal about what people think about your business is in what those questions look like. And a really cool thing that I've seen one of our founders do is, as those questions come up, they create a Google Doc, which is an FAQ basically, where every question that every other investor has asked goes in there, and their answer and links to any supporting documentation is in there. So I love that as part of the fundraising process, as well as a pitch deck, you have an FAQ document, because there's not an infinite number of questions to ask about a startup, but where people really push you and ask, you're only going to get asked 10, 20 questions in a pitch meeting. Where did they focus? Were people asking you a lot about your team? And so what was it that they were really getting to and asking about that? Were people asking you a lot about the market? Or was it that they doubted it? So what was the question behind the question, or what was the thought or insight by the question? And in the moment, you're just reacting and answering and engaging, and you've got a lot of adrenaline. And it's not until after the meeting that the sort of more disciplined, sober thing to do is just to write down every question that you're asking, and to really assess, did I do a great job of answering that question? And then you get better and better through time, because you're being really proactive about having better answers to those same questions. So that on the fundraising side is the best thing that I've seen in terms of how founders get better. You also just need a lot of practice. The 15th pitch you do will be better than the first, and the 35th pitch you do will be better than the 15th. So you can hypothesize about how to get better and read books, but until you're in there and feeling those nerves and stalling because you don't have a good answer, and that's when the real learning happens, and better to start sooner rather than later, I think.
So last question from me before we jump into the audience Q&A. So for people that are tuning in live, and if you've got a question for Nick, just make sure that you put it into the Q&A tab at the bottom. But just Nick, kind of again, touching on your kind of point about trends, one of the things that's often spoken about from an investor perspective is, investors invest in lines, not dots.
Yeah.
And when we last spoke about this, you mentioned that that's really important. And every investor that's been on the show has kind of spoken about wanting to meet with founders as early as possible. But one of the points that you raised was you want to make sure that the story or the data points that you're giving to investors is valuable. And they can be negative data points. So again, from an investment perspective, when is the right time for founders to meet? What should that initial point look like? And what should that story or that progression look like over time?
Yeah. So the way this conversation goes is you ask that question, investors say the sooner the better, and then entrepreneurs say, well, what if I'm still figuring things out? And, what if I tell a bad story? So it's a little bit case by case. But in general, you want the sooner the better, and then you want that consistent communication over time that shows improvement that shows the business getting better, that shows clarity of communication from the entrepreneur, that shows, an evolution. And that's not always possible because, for whatever reason, you might not have the investor's email, you might not have had a good enough connection. I think the most important point is that don't index too much on any single one investor's pass. Let's say I meet 100 companies this year properly and I invest in 2, there'll still be a number, I don't know what it is, 8, 10, 20, 30 of the 98 that I said no to that'll go on to be great companies that'll create wealth for their investors, for their employees and for themselves. Investing is such a personal thing, and I'm having to, one thought that I'm having to have with every company that I say yes or no to is, do I want to spend the next 10 years of my life working with this founder on this problem? And am I going to be excited at 7 a.m. on a Sunday morning to get a call to find out that something really bad's happened and we need to start solving it now? And so there is a little bit of alchemy in that relationship and that excitement for the problem that allows you as an entrepreneur to say, look, I got a no from that investor, but it doesn't mean that I'm wrong or my idea is bad or I'm going to fail. It just means that, for whatever reason, that entrepreneur didn't want to go on the 10-year journey with me. And the reasons will be in the questions that that investor asks, by the way. That's why that exercise is so valuable. But I just think, we're in a reasonably fraught business. We make a lot of mistakes of judgment. We don't get it right all the time. That's the nature of what we do. And I think it's always good for an entrepreneur, remember, not to over-index on a single no from an investor or even lots of no's from an investor, because the majority of our job is saying no to things that are good, but just not so good that we want to spend the next 10 years on it. So it's a long answer to the question.
Yeah, I mean, I know for me personally, it's obviously a different context, but one of the things that I get a lot of energy from people that I sort of end up building long relationships with is when kind of people do what they say they're going to do, or you feel like there's progression from every subsequent meeting. So as you mentioned, something like, a founder that you're meeting teaching you something new about a market that you didn't know, or just feeling like you're along for that journey. I think, again, one of the things that you mentioned in the last episode was there aren't a lot of truly exceptional people out there. And so when you do find them, you want to do everything that you can to kind of help them as part of that process as well.
Yeah, it's a harsh thing to say, but it's probably true. 100%. I agree.
Excellent. So on that note, Nick, we might switch tact and move over to audience Q&A. So just a reminder that if you have any questions for Nick, just put them into the Q&A tab. So I'll be picking a few of them out. One of the questions that was submitted through the registration process, Nick, was from Matt Cole around essentially around the premise of the elephants story that you wrote a little while ago. And the question is, how did you pick who your elephants are? So for those people listening, just wondering if you can give a little bit of context around what the thinking behind the elephants are, and what was that process for you in terms of identifying who those people would be for you?
Yeah, so the elephants is basically a peer group that you can work with over a long period of time and to help support you and hold you accountable to what your vision for yourself is over the next 10 years, 3 years, 1 year, 1 month, 1 week. And so it's a peer group that supports and holds you accountable and gets to know you to a level that maybe no one else has in that particular context. So if you Google Nick Crocker, the elephants, the post will come up. It's quite an old post now, but it's been really wonderful to see elephants groups popping up all over the world as a result of it. And I think when I was talking earlier about the support network that helps founders to be their best, I overlooked an elephants group. So the question was, how do you select your elephants group? So I was quite fortuitous when our first elephants group started. One of the elephants had been in YPO and had enjoyed it, but felt like he could create his own version of YPO and make it better. So YPO is Young Presidents Organization, I think. It's a support and accountability group for founders. So he had suggested it, and I was just lucky enough to get caught up in the wave of it. And there was a really obvious grouping of the four of us who were all running companies at similar stages at that time. It's the most important decision you'll make that'll dictate whether your elephants group works or not. And so if I could give you one test, would be to ask yourself about that other person. Would you be willing to tell them your bank balance today and the greatest fear you have about the relationship you have with your loved ones? Like if you're willing to share, be raw and vulnerable in that way with them, you've probably got someone who is going to be a great like trust level partner for elephants. And if you don't, I mean, you can definitely evolve it, but where elephants is most valuable is where, as a group, you share the raw and accurate data. And sometimes that can be painful and humbling, and you want a group of people where you can feel safe to do that. So thinking in your life, who are the people that you feel most comfortable sharing those deep, dark fears is probably the best place to start. And then the other thing to sort of calibrate that is you just want people that are at a similar stage in life so that you can be going through things at the same time, again, as peers, and not where one person in the group is a long way behind or a long way ahead and so isn't able to empathize to the same level. So similar peer grouping set at a similar stage where there can be an extreme level of trust.
Amazing advice. Thank you. Another question from Jordan Hughes. Nick, what are you reading at the moment and recommending?
I just finished, so one of my favourite Australian firms is a firm called TDM. They invested in Culture Amp's last round, they invested in SafetyCulture's last round. And one of the people at TDM is former Australian Test cricketer Ed Cowan. And so I just finished his diary from 2011. And what made it so fascinating is at the time that he wrote it, he was playing for the Tasmanian team. He'd left the New South Wales team. He'd been playing for the Tasmanian team. He was right on the cusp of breaking into the Australian team, but was struggling. And the year after he wrote it, he made his Australian Test debut. And to get that raw insight into what it's like for an elite athlete trying to break through, after reading it, I texted him and I said, it just at points in reading it, it just didn't feel like it was worth all the pain. But the thing that he said was, what I tell everyone every young cricketer is, you just never know what's around the corner. So it was a quick read, but really interesting insight. One of my personal obsessions is like elite athleticism, professional sport. And so I just finished that. I just started the Malcolm Turnbull memoir 2 nights ago. The amount that he was able to achieve by the age of 30 is like, if there's a top 3 all-time achievers by the age of 30, Malcolm Turnbull is in that top 3 in Australian history. It's quite extraordinary. So I'm just up to the point where he turns 30 now. So that has been really good. I think people want me to say something really deep, like Sapiens or something. What's the deep book that I've read recently? I'm really loving this guy called Byrne Hobart, Byrne Hobart, as in Hobart. His Substack has been exceptional to read, and I only just discovered him, and he's a bit more like a bit deeper, I guess, for people on this call that are into people writing about startups and business. So I'll recommend the Byrne Hobart Substack.
Awesome. I'll make sure I add a link to all of his resources and books in the show notes and in the email out to everyone that registered. Just a quick comment as well from Preston Pesek. I hope I'm saying your last name correctly, but 100% agree on CEO coach investment. It made a 10x difference for him, which is great to hear.
Preston calling all the way in from New York. Preston is a legend and one of the first people that got me into the concept of yoga and meditation. So hi, Preston.
Amazing. Thank you for tuning in, Preston. Another question from someone who I said that I would screen his questions. He's actually a colleague of mine, Dave Engel. I don't know how comfortable you are answering this question, but how are LPs looking at exposure to startups in the current environment?
It depends. It depends what kind of LPs. I think at a macro level, there's been a rush to safety. And so maybe that's meant a move away from high growth, high risk startups. But at the same time, I think LPs make commitments over 10-year periods when it comes to VC, and so there's a little bit of a pause moment maybe a few weeks ago, but with the markets kind of coming back, I think things are warming up again. So we'll see. Again, we're taking the same approach that we advise with our CEOs, just absolute transparency with our LPs about the status of our portfolio, and just using this as an opportunity, using a difficult time as an opportunity to build trust. But I think the desire to invest in great companies at the early stage is as high as it's ever been, and I don't think it's going to change.
So I think we've got time for 2 last questions. So one from Paul Hart. What are some basic tenets or threads that Didier at Culture Amp is recommending that startups should be mindful of?
Yeah, it's cool. Go to their, they've just launched an insights page. So if you Google Culture Amp Insights, and you can break down by industry, what are the key factors in companies with super high engagement by industry. So, if you want a specific answer, you can go and get it from the Culture Amp. I think it's literally cultureamp.com/insights. But if that doesn't work, just Google it or email me and I'll share it. We talked about core values before, and one of Culture Amp's core values is have the courage to be vulnerable. And I'm speaking for Didier now, but I think that would be a recurrent theme in his advice. And if you just think about Culture Amp as a product, what it brings is there's this invisible thing that we all call company culture, and this invisible thing that we talk about, which is how is my team feeling? And we all use anecdotes and sort of gut feel to have that discussion. And Culture Amp takes that invisible sort of vague discussion and makes it very real and very tangible. And I think, versus like, hey, here's some advice to be a great leader. I think the way to do it is just to seek truth with some fearlessness and just face up to which parts of your team are not succeeding, which parts of your culture are not as strong as others, which parts of your company morale are the weakest, which parts of your organization are struggling the most. And it's such a non-human thing to want to lean into that pain. But this is the time to do that. Like, this is your best chance to do it. And I think, Culture Amp as a product exists for that very purpose. So I think courage to be vulnerable and then lean into the truth, even if it's painful.
And then very quickly, I'm just going to combine 2 anonymous questions that have come through, which are 2 sides of kind of a similar question. One is, what is the best way to get into a pitch meeting with VC, such as Blackbird? And the other one is for someone who's looking to break into VC as a career. Is there a particular background, or what type of recommendation do you have?
Okay, so the best way to get into a pitch meeting is probably if there was the highest conversion percentage is to get a warm introduction from one of our founders. That's one that you very rarely say no to a recommended introduction from a founder. And then there's a group of people around us that we trust. So get introductions, whether that's founders or friends, can make introductions. We're all available. Our first name at Blackbird.vc is our email protocol. So you can send us emails. And I took a meeting the other day from a Twitter direct message that just had the founder's revenue growth chart. He said, what did he say? Is this enough for an intro? And just had a picture of his revenue going up into the right for 5 years. So we did the meeting. So basically, anyway, the hard thing isn't how you get introduction. The hard thing is just, do you have a good story to tell when you get introduced? And that's actually the difficult thing. Interested in breaking into VC as a career, what background do we typically look for? Well, I did political science law. Samantha did law and something else. Rick did law, and Nikki, I think, he did this degree at UNSW with the Atlassian guys that was something special. So all different kinds of backgrounds, although I just mentioned 3 lawyers. We don't look for any specific background. If I was trying to break into VC right now, and it depends at what level, like if I wanted to be a general partner versus an analyst, but I guess I need what's the right culture fit? I mean, it depends on the firm, basically. Like if you go to each firm in Australia and there's only 15 or 20 and read the way they write and read about the companies that they invest in, you'll get a feeling about whether they're a fit for you. How do you break in? There's a post that I just tweeted called "The Tailwinds Will Vanish" by one of the investors at Founders Fund, and it's just such clear thinking. I think if I was trying to break into VC, I would just start writing about the startups that I like and sharing it on Twitter and interacting with VCs, Australian VCs on Twitter, because we're all looking for great content, new thought, new insights, and there's actually not a ton out there. Like, it's pretty rare. So I think there's a big open space for new people and new voices in kind of the investing landscape in Australia. And the way to break in would be to set up a newsletter and start writing it and sharing it and getting people's thoughts on it. I know you want a more specific answer than that, but that, unfortunately, the answer, as always, is it depends a bit.
Nick, on that note, thank you so much for your time and for sharing your insights. The great thing about doing this live is that we can actually see feedback. So Daniel mentioned great session, very insightful as well. So it's not just me saying this to you. Nick, thank you so much for once again taking the time to be on the show. It's been awesome to have you back on. And thank you to everyone for tuning in. Just before we kind of head off, this podcast will be available. So I'll take the audio recording from this and share it to all of your favorite sort of podcast feeds as well, if you'd like to listen back to this episode. And this will be part of a weekly series. So every Tuesday, I'm going to go live at 8 a.m. And next week, we have Dominic Pym, who's the co-founder of Up, one of my favorite Australian products at the moment. Absolutely love what they're doing in the fintech and the banking space. So really excited to have Dom on. The registration page is live. I'll send through a link to everyone as well, and in case you're interested in joining next week. But once again, thank you all for joining. Nick, thanks for taking the time out of your day, out of your morning to be on the show. And
my pleasure.
We'll see you all next week. Cheers.
Thanks a lot.
Thank you for listening to episode 109 of the Startup Playbook Podcast. I hope you enjoyed this new format of the show, and if you have any feedback on ways that we can improve, please feel free to email me at rohit@startupplaybook.co. As I mentioned, as part of this new format, I'll be going live at 8 a.m. every Tuesday, and next week I have Dom Pym, the co-founder of Up Banking, which is one of my favorite Australian products at the moment, on the show. If you'd like to join us live for that interview, the link is tinyurl.com/EP110DomPym. That's DOMPYM. Until then, I hope you stay well, and I will see you next week.